The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos. And these are your headlines. Fresh strikes hitting Tehran as the US and Iran trade threats. President Trump vowing to target power stations if the Strait of Hormuz isn't reopened. And Iranian leadership warning it will respond by targeting energy and water facilities in the Gulf.
Fears of further escalation prompt global stock market selling. South Korea's KOSPI leading declines in Asia, and futures pointing to a negative session here in Europe. Oil prices continue their march higher, WTI once again crossing the $100 per barrel mark.
Rising inflation fears hit the outlook for metals. Gold wiping out this year's gains, extending declines after seeing its biggest weekly slide in more than 3 decades.
President Trump and Iranian leaders have traded new threats as the war in the Middle East enters its 4th week. On Saturday, Mr. Trump issued an ultimatum to Tehran over the Strait of Hormuz, threatening to, quote, obliterate Iran's power plants if the critical waterway is not fully reopened within 48 hours. Mr. Trump's deadline sparked warnings of retaliation from Tehran, which threatened to strike energy and water infrastructure across the Gulf and vowed to close the Strait of Hormuz entirely if its power plants are hit. Well, as ever, leading our coverage on events in the Middle East is Dan Murphy, who joins us now. Dan, I just read in the headlines, as we enter our 4th week, I think that's a scenario that many people just thought wasn't going to happen. A quick, sharp war or operation, as the US leadership calls it, and then perhaps a withdrawal. But no, it seems to be going on and exacerbating and potentially getting more serious for the global economy.
That's right, Steve. Good morning to you. And it seems as if risk assets may now be pricing in a longer war as well. The sell down in Asia was significant. South Korea and Japan leading losses. And now oil markets also in full swing mode here as well, as we see the US continuing to ratchet up the threats here. Oil markets certainly on edge today as President Trump's 48-hour ultimatum to Iran ultimately counts down now. And the region also holding its breath over the future of the Strait of Hormuz. As you just mentioned, President Trump threatening to obliterate Iranian power plants if the strait is not fully reopened by tomorrow morning. And the Treasury Secretary Scott Bessent was also on NBC's Meet the Press on Sunday. He was asked whether the US was scaling back or escalating, and he was quite blunt, saying sometimes you have to escalate to de-escalate. So an interesting mixed set of messages coming out of the White House now as well. And then on the Iranian side, we've also seen Tehran warning that any strike on its own energy facilities will be met with attacks on American and Israeli energy, technology, and desalination infrastructure across the region as well. And in fact, Iran's parliamentary speaker, Mohammad Ghalibaf, also took it a step further here, warning that oil infrastructure across the region would be, quote, irreversibly destroyed as well. And that's a big fear in the region right now as well, because as you know, Gulf energy infrastructure has already come under attack over the last 4 weeks. So it is a worst case scenario for CEOs and for Arab leaders if it eventuates. And in fact, the Aramco CEO, Armin Nasser, has reportedly cancelled his headline appearance at this week's CERAWeek Energy Conference in Houston, choosing to remain inside the kingdom to deal with this crisis. And of course, oil also reacting to this as well. I mentioned we've seen oil prices moving between gains and losses in the last couple of hours. But of course, oil up some 50% since the war began. And the International Energy Agency also warning today that the global market is now facing its largest ever supply shock. That is despite the fact that we've seen emergency reserve releases and US efforts to facilitate Russian and Iranian oil sales as well. Goldman Sachs also saying that the damage could last through 2027 in a worst case scenario as well. And the IEA's executive director, Fatih Birol, was also saying, the solution to this crisis here is pretty simple. Just reopen the Strait of Hormuz. But it seems as if the Americans, the Israelis, the Iranians are really digging in now with this most recent rhetoric, and reopening the strait is looking increasingly more of a challenge as well.
Dan, there's no doubt regional disruption is what the market's looking very closely at today. But over the weekend, it was the firing of a long-range missile too that had Europe nervous about the potential for the turn of the events in the Middle East. Just walk us through that, the targeting of Diego Garcia.
Indeed. So the Iranians used an ICBM to target Diego Garcia at the weekend. This is about 4,000 kilometers away from Iran itself. So perhaps the Iranians were attempting to signal here that they have the military capability to hit European capitals. Now, it doesn't appear that that is the threat at this stage, at least from what we have heard from Iranian sources. However, this has sent a shockwave through the European capitals, and indeed in Brussels as well, because it ultimately means that if Iran chose to do so, it has demonstrated the military capability to hit Europe. What is the translation here? Will we see European leaders responding in turn, perhaps aligning a little closer with the Americans and the Israelis to get on board with those efforts to help to reopen the Strait of Hormuz? Will this ultimately also lead to perhaps a rallying among the European capitals as well to pressure the Americans and the Israelis to bring this war to an end sooner rather than later? Lots of questions about the impact of this still really to be answered at this point. But of course, this revelation from Iran that it has this capability, of course, also raising the alarm, not just among those leaders, but for the risk assets as well.
Dan, thank you so much for the coverage. We do appreciate it. Sets the scene for us on markets this morning as we take a look at the very strong reaction that is now transpiring across the Asian markets today. The higher oil price, the escalating threat again as we face another trading week. And you can see it is the South Korean market again that is reversed. We saw a bounce back last week in some quarters. The market was trying to recapture territory in some of the sessions, but fairly violent action to the downside today. 6.5% is the extent of the selling for South Korea. Japanese stocks down, but actually it is the Hong Kong market that has followed suit, down more than 4%. So that's where some of the concentration of the selling is taking place today. Japanese stocks and the Chinese market not contained, as you can see, down more than 3%. So it does suggest that some of the selling will catch up with Europe today. Don't forget, last week we saw an escalation of the selling into that Friday session. We'd had some selling over the course of the week as markets turned tail around the rise in bond yields. The escalation that we saw there, thanks to repricing of the risk around inflation as the oil prices escalated, and what that could mean for second round effects. So the markets last week, as we take stock, you can see we were tracking down 1.4 on that Friday session for the UK stock market. We're down 2% in the Friday session on the Xetra DAX. As we get going this morning, if you want to change over the board, you can see at the extent of it, we were down 4.5% for the trading week on the Xetra DAX. This morning, you can see further selling anticipated on German stocks to the tune of 2% thereabouts, so topping up on the selling. If it was a 2% sell-off this morning, that's in addition to the 2% we saw on the Friday session. So it's telling you about the extent of the repricing in markets today. I want to take you to WTI, Brent, gold, silver. You can see the safe havens versus the escalating oil price as we've marked higher. And WTI to above the $100 mark. We're 113. You can see that split between Brent and WTI that is still very wide in terms of the premium. The safe haven trades are not proving a safe haven. We saw that transpiring last week. The market was seeing selling flush out in those gold trades as, again, recalibration around the potential for interest rates not to be cut, but actually to be hiked in some jurisdictions. And in particular, when it comes to the US, a lot of the market participants wiping out the potential for 2 rate cuts now. So that has had an impact on the gold price. And you can see down heavily, 9% It was something we've been watching for many months as the gold price has tracked higher. We had been asking whether it would truly have the safe haven characteristics that gold typically does actually have, but it's not the case. As you can see today, down 9% and silver down a fairly mighty 10%. Well, gold. The US dollar has shown its might in moments of the past number of weeks where we've seen it actually show that strength and prove somewhat of a safe haven. Again, this morning it's a dollar trade, isn't it? Euro is down about 1/3%. Sterling is down versus the dollar, and dollar is firmer against all the other safe havens too, from the Japanese yen to the Swiss franc. So it is a dollar strength story again as we get going for the Monday session. Well, US futures, now the trade that we saw last week, again, was very strong to the downside. The week-to-date performance for the Dow down 2.1%. We've backed off the highs, almost in correction territory, about 9.7% down on the Dow now versus its record highs. And you can see again, the behavior to the downside suggests it's going to be concentrated around selling. The Nasdaq 1% down. The tech stocks have been somewhat of a safe harbor in various different trading patterns. Markets chasing the growth story that may still be resilient. But the other layer on top now, the back end of last week, was the high yield story, the tighter credit environment, which is again negative for technology. So again, that is not a safe harbor now as markets again take risk off the table. Ben.
Well, Iran has also widened its threats to include buyers of US Treasury bonds. This is amid President Trump's ultimatum around the Strait of Hormuz. In a post on X, Iran's parliament speaker said buyers of treasuries would also be purchasing, quote, a strike on your HQ and assets. Now, amid the ongoing disruption in the Strait of Hormuz, the IEA's executive director, Fateh Birol, said discussions are underway for a further release of oil reserves if necessary. The group previously facilitated the largest ever release of emergency stockpiles, making 400 million barrels available. Birol said the current crisis is worse than the 1970s oil shocks combined. And on a programming note, our US colleagues will be joined by US Energy Secretary Chris Wright, so don't miss that conversation. That's coming up at 2:20 London time.
Just checking, that's the same Chris Wright who had to delete a message a while back because he said that the ship had got a safe passage through the Strait of Hormuz when it never happened. Just confirming that.
Oh, well, right. They'll ask him about that, I'm sure.
Indeed. Disruption to the Strait of Hormuz is also affecting the movement of fertilizers. Around 1/3 of global seaborne fertilizer, which is around about 16 million tons, passes through the strait, according to UN data. Look, I'm privileged to have a network of contacts who keep me on the straight and narrow. And when I've said something that's wrong, they tell me. And when I haven't said something that needs to be said, they tell me, including our next guest, who believes the world needs to be focused on food, not just on crude. Noel Fryer is founder of Fryer's Report and has an enormous CV in this business. Noel, you contacted me last week and said you're missing the point, Steve, and I appreciate that, Noel. Tell me a little bit about the importance of this region for fertilizer, what it means for food, what it means for global crops, and why this could be such an enormous problem for the world.
Good morning, Stephen. Thank you for the invite. I didn't tell you were missing the point. I think I said that one of the major aspects of the problems in Hormuz was not being covered by the media. Now, I get it that they're interested in the price of crude and stock markets, but this potentially long term could be the biggest issue. And whilst the media is starting to talk about the impact on food price, nobody is yet talking about what it might mean for actual food security. As you said, about 1/3 of all fertilizer or seaborne fertilizer goes through Hormuz. About 1/5 of all natural gas goes through Hormuz, which is the bedrock ingredient for nitrogen-based fertilizers. This is leading to production particularly in Asia, India, Bangladesh, Pakistan, being either partially or completely halted. Asia is going to be the biggest sufferer of this. And you have to, I think most of us think that if we think about rice, we think you put it in a field, you flood it, and that's it. But in fact, rice is a very intensive user of fertilizer. 90% of the world's 800 million ton rice crop is produced in Asia.
No.
And that is potentially huge. Just to give you a little anecdote about what the loss of fertilizer can mean to yield. In 2021, the Sri Lankan president decided that Sri Lanka would go green and banned all imports of synthetic fertilizer. The consequence was, according to different sources, up to a 40% drop in the rice crop. Now, you imagine that projected over the whole of Asia, and it's worse than significant.
No, that is an extraordinary stat, and I appreciate you bringing that to our attention. This isn't just an Asian problem, though, is it? Although the effect is magnified there, and that Sri Lankan example was quite extraordinary. Tell me about how this affects the Western world as well, primarily the United States, which also will see a follow-through from this.
Yeah, it's very difficult to, when you're talking to people about what the extent of farmer coverage of their fertilizers, it's all kind of anecdotal. I have friends and colleagues in the US in the same business, and they tell me that there's no problem, that corn farmers put down their fertilizer months ago. And then I was trolling the web over the weekend looking for additional information, and I saw an article which said fertilizer supplies in the US, excuse me, are about 25% below normal. I also saw an article in the EU which said manufacturers initially reported no immediate availability issues, but imports dropped by 80% in January, and current EU stocks are forecast to cover less than half of farmers' needs this year. So it's a little bit difficult to get accurate information, but there's no doubt that it's a problem around the world. This time of the year is absolutely crucial. It's crucial in the Northern Hemisphere for spring crops, for corn, for beans, Canada, spring wheat, obviously for the Asian rice production. But it's also key in the Southern Hemisphere, where Australia, major exporter of wheat, barley, and canola, rapeseed, as you call it in Europe, they are about to put down their winter plantings, and they tend to be very heavy users of fertilizer at planting time.
Right. No.
Australia imports about almost 100% of its urea requirement.
Yeah.
So this is a wide-ranging problem, and the events or the threats over the weekend between the US and Iran do not suggest this is going to end anytime soon.
No, I want to ask you about that. That's the point, Nolo, I want to ask you. We heard over the course of last week, Mohammed Al-Arian, for instance, was tweeting about this. So the bond markets were also looking at the food story, which means that they're worried about the consequences for some of the inputs to inflation. How do we think about policymakers responding here? Is it a response you think that needs to happen at a government level, or is it something where farmers themselves can fix at some point if the Strait of Hormuz starts to open up? How do we think about the response required here?
Well, the fertilizer has an additional problem compared to crude and the stock market. If the war ended today, crude prices, stock markets would react almost immediately. The problem with fertilizer is that it has to be applied at a particular time. If your crop needs fertilizer in March, there's no point applying it in June. The yield loss is already there. So it's almost impossible for any government to take measures to solve the problem.
Noel, I just want to get your thoughts on this. The BBC has spoken to various farmers in the southwest of England, and I just wonder if this is typical of what you're describing. It puts it into very sharp focus. One farmer said he paid £350 a tonne for fertiliser in September. If he had to buy more now, he said he'd be looking at around £600 a tonne. On top of that, he said availability is difficult. You just can't get hold of liquid fertiliser. And the calculation he made is that if someone hadn't previously stocked up, for a 100-hectare farm, they'd be looking at £14,000 extra for the fertiliser they need to plant the spring crops. Does that sound like an extreme example to you, or do you think that is typical of what farmers in the UK, Europe and beyond will be facing as a result of this?
Ben, I think it's pretty typical. I really do. Fertilizer prices, obviously there are different types of fertilizer. It's a little bit like crude. If Brent today is 113, there are already regions in the Middle East paying 150. Fertilizer prices around the world differ, but there is no doubt that this is a significant issue, particularly as we're coming off a season where farmers have in fact been losing money without government handouts. They're losing money. Input costs are very high. Grain prices have been very low, so they really are in a bad way. Yeah.
No, I really, really appreciate you coming. I know you've got a stunningly busy week and you're travelling as well, and you're an avid viewer of Squawk Box as well. So thank you for bringing our attention to an enormous story. I know our .com team is writing up the whole story and adding some commentary from you as well in there. So really good, Noel. Thank you very much indeed for joining us, and we'll stay in touch. Noel Fryer, who is founder of Fryer's Report. New York's LaGuardia Airport is currently closed after an aircraft struck a ground vehicle. A Bombardier CRJ-900 operated by Air Canada Express hit a firefighting vehicle upon landing at runway 4 around 3:40 a.m. GMT, according to the port's authority. The vehicle was responding to a separate incident at the airport. The National Transportation Safety Board said it is launching a GO team to investigate the incident. NBC News is reporting that both the pilot and co-pilot have died.
Still to come here on the show, France's far right fails to make major inroads in the country's municipal elections, but touts its success across regions. We'll have more next. Plus, ChatGPT maker OpenAI reportedly plans to nearly double its workforce by the end of this year, as it looks to keep its lead in the AI race ahead of rivals like Anthropic. And banks are now switching their bets on the ECB's next moves to price as many as 3 rate hikes this year. We'll be hearing from the governor of the Bulgarian National Bank, Dimitar Radev, later this hour.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Welcome back. UK Prime Minister Sir Keir Starmer is set to chair a Cobra meeting convening key cabinet members and the Bank of England governor focused on the economic impact of the war in the Middle East. The meeting comes after Iran fired 2 missiles at the joint UK-US Diego Garcia military base in the Indian Ocean, which failed to reach their target.
France's far-right National Rally has failed to make major gains in the second round of the municipal elections this week, coming second in key battlegrounds such as Toulon and Marseille. In Paris, the Socialist Party's Emmanuel Grégoire has beaten his conservative rival to ensure the French capital remained left-wing. Despite the defeat in some of France's key battleground cities, National Rally President Jordan Bardella said he was optimistic about the party's standing.
We fully understand, along with Marine Le Pen, the responsibility that is now ours. The successes of this evening are not at an end, but a beginning. The beginning for France, the beginning of a patient, serious and determined renaissance. The beginning of an alternation that must tomorrow be embodied on a national scale, by defending national unity, by rejecting any logic of tension and violence. The National Rally has become the calm force that France needs to begin its renaissance.
Well, let's get to Charlotte more. Charlotte, plenty to pick over here. What captured my attention was the former Prime Minister, Edouard Philippe's run for a mayoral position that was a precursor to perhaps eyeing the Élysée Palace when Macron leaves at some point. That was a significant development too, buried in all the news flow here.
Yeah, and also because the polls had shown that actually he could not win that election, therefore really opening the question, because he's seen as one of the most popular politicians out there, but he has won his election there. So certainly he enters the race in a strong position. Now, for the far right, as you remember, they come out of two electoral wins, whether it was the European election or the legislative election, and now they really want to have a big symbolic win because they don't have big territorial roots there. The Rassemblement National, it looks like they have failed to make that big symbolic win. They are reinforced in some of their traditional strongholds, whether it's the northeast or the southeast, but some of the big wins like Toulon or Marseille, they have failed to win those. Like Perpignan remained the only one of the cities over 100,000 inhabitants to be run by the Rassemblement National. An interesting place to look at was Nice, because there the centre-right politician Éric Ciotti made an alliance with the far right and he won that city. So maybe that will give a bit of a symbolic moment there, whether some of the other centre-right politicians think that the alliance is the way forward. But the other side of the equation here is that actually the socialists held much better than expected. They continued to hold Paris, same with Marseille, and in Lyon with an alliance with the Greens, they won there as well. So the three big main cities stay to the center left, and that would be one of the big lessons there, because in the places where they make an alliance with the far left, like Toulouse, they didn't win. So that really puts in question whether they want to go into an alliance with them for the presidential election. So an interesting basically conclusion from this, that the traditional mainstream parties, whether it's centre-right or centre-left, cannot come out reinforced from this election just ahead of the all-important 27 election. Macron's party, however, we know there already was a party around a man, and they have struggled to make those territorial roots, and it looks like Bayrou, also another prime minister of Macron, has lost his election, and the candidate in Paris, Rachida Dati, she has lost her election as well. So they were the ones that really lost that election. All the other parties claim victory, where really we don't really know. This kind of election was supposed to give us some answers ahead of the 27 election. It's kind of giving us more questions.
So, great summary, by the way. Thank you. You made clarity of something I failed to understand. Does this mean, I'm trying to summarise your summary. If the centre can find some form of alliance amongst itself, then it can hold off the threat from the left and the right. But there is no point in the centre tacking to the right extreme or the left extreme, because that's just not going to win votes.
Yeah, that's really the conclusion there. That it looks like the centre, if they just manage to find the right candidate to go behind, and for the centre-right, Edouard Philippe, the Prime Minister in the ex-Prime Minister in Le Havre, could be that man potentially. But if the centre-right or the centre-left manage to find the one person to go in that election, in terms of voters, they're certainly the ones in the lead. And when they make alliances with the far left in particular, it doesn't win it for them.
And worth pointing out, Edouard Philippe has been one of the more popular politicians in France in recent years, hasn't he?
Yeah, absolutely. Yeah. He was the very first prime minister under Macron, and since then he has been very much one in the polls. He lost a bit of popularity last year when he said that they should be calling for a presidential election, kind of backstabbing the president to a certain extent, but certainly he remains to be potentially the front leader against the potential far-right leader, because here again, we don't know who might be running for the Rassemblement National because of some legal issues for Marine Le Pen.